Have you ever gotten into a trade where everything looked fine and then you get killed? Momentum is in your favor and then suddenly everything goes against you. Now this is down to momentum, which is a very simple concept that is massively overlooked. I rarely ever hear anyone talking about it, despite how important and useful it can be. Now in this video, I'm going to teach you how to use momentum concepts to basically overcome this problem where trades whipsaw on you and you end up getting killed on a trade that looked good. What we're going to do is discuss momentum. I'm going to break down everything about how it works. And really, regardless of how you trade, you can bring in this simple concept to take way less losses and make sure you're on the right side of the market for higher probability, higher accuracy, and higher reward trades. So with that said, let's get to it. So there are really two core considerations when it comes to gauging momentum. It's the speed and the size of the candles, all right? We want to see, to determine high momentum, fast, large candles. To determine low momentum, we want to see slow, small candles. So take a look at this chart that we've got here. We're going to identify the difference between a high momentum and a low momentum move. Now, we're going to start from this point onwards, which is where we first started to see a clear change in control from buying to selling. This move here, so basically this candle, is a very large bearish candle, okay? We see from here to here, we had large bearish closures with very little rejection from buyers. Now, the fact that the market managed to cover this much ground in one individual candle shows us that sellers are reasonably strong and the buyers aren't really anywhere to be seen to fight back against this. Now, markets are a battle between buyers and sellers, so when we look at momentum in this way, we are able to see who's in control clearly based on the size and speed of these candles. So that's a very large bearish candle. That's the first thing to consider. The second thing is the speed. So what we can do is identify the high to the low of a bearish move like this, and we can see that this happened within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, 11 candles. That's going to be 5.5 hours because we're on the 30-minute time frame. Now, if we look at the pullback move, okay, which is number one, smaller, we have smaller candles in here, okay? None of these candles are anywhere near as large as this one here. We also see the selling candles are actually bigger than the buying candles in this move. Again, a sign of weakness, right? Sign of seller pressure. But we consider the time from the low to the high. It's actually more than twice as long as it took from the market to get all the way from there to there. So we've covered this ground from high to low in 5.5 hours. And in over 10 hours, we only managed to recoup about 50% of the move. Now, this is a good indication as to which way the market's likely to go, because if we see weak buying against strong selling, we have an indication that the next likely move is going to be strong selling. And as you can see so far, that's what we get. We get a strong sell move with large candle bodies, little to no wicks, no rejections, and it happens very quickly. Again, this downward move has occurred in a much faster format to the pullback move previous to it. It happened even faster than the first selling move. So from this idea, number one, you'd have opportunity to look at sells here. We're going to talk about how we trade this soon. But number two, we could again have indication that unless we start to see a massive drive to the upside, if the buying pressure stays low, the next move could also be a strong bearish move because the sellers are clearly in control here based on the fact that selling candles are very large and the selling moves are happening very quickly. The buying candles are very small and the pullback moves, the buy moves, are happening very slowly, okay? Take a look at the next moves of this market. Again, it's a very strong, fast sell-off. So, momentum comes down to how large the candles are and how fast the market is moving. A market that is moving with strong bearish candles at a fast pace is a bearish market. If the pullbacks in the buy side are then small candles, slow pace, that still remains a predominantly bearish market. You can see the kind of opposite going down in this direction, right? We have strong bullish move, slow selling move. We have a strong bullish move. Now this move here, until we started to break at this point, doesn't particularly have any large candles, but we do have uninterrupted candles. So we've got buy, 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 indecision, buy, 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 first selling candle, tiny. And then we continue the buys until the explosive move. So again, a third factor you can consider is the amount of buying versus selling candles, right? This one's not going to be as strong or as important as the speed of the move or the size of the move. But if you've got a move like this, where the predominant candles are buying, there's only one or two bearish candles in there, that's showing you that in this phase, buyers are in control. albeit not as strong as they would be if we were to see, for example, a very fast buyer controlled move like this. But again, all the candles here are bullish. So the speed that a move takes place and the size of the candles, those are the predominant things we want to consider in terms of momentum. And most people miss this. But now let's go take a look at how we can use this in real market context. And then I'll show you how it turns into trades. So pullbacks matter as well. And there is a good way that you can easily avoid taking losing trades and easily avoid joining good winning trades by just monitoring the size of the pullback. So in this trade example, we've seen the structure shift from down to up, okay? We've had a downtrend which has shifted into an uptrend with a very strong bullish move. This is a very good sign when we want to look for a trade. However, one way we can dodge losses that basically flip on us, so if there's a trade we have prepped up and then it looks like the market's changing direction, we can actually avoid taking a loss. And we do that through monitoring the pullback. So what we generally want to see is going to be a slow pullback against the overall direction. Now, obviously, based on the lessons we've discussed so far, we love to see a strong push up. But for the pullback, we then kind of want to see this nice slow choppy movement, because what does this tell us? Well, when we see a movement like this that is moving considerably slower than the bullish push in a buy example, it tells us that there are still buyers kicking in at each of these lows. That's why we're getting these pullbacks. And that's why the selling move is choppy instead of straight down. So if we see an explosive move to the upside, but then we see an equally explosive move to the downside, and we were looking to buy from here, well, we can cancel those orders and avoid taking a losing trade. And this saves me quite often. And if you're not using it, it probably isn't saving you where it could be. So taking it back to this example, we see this clear structural shift, right? We have an imbalanced demand zone at the extreme. So I'd like to buy from there. And what we would be looking for is basically what we're seeing here, to continue down to the area of interest. If we got that, we'd have quite a high clarity, high probability position. We could execute that with confidence. So that's what we would look for. However, when we see this very, very strong, powerful downward move, basically from here through to here, we could say this trade is unlikely to be a good position. Why? Because we are seeing clear seller control. Yes, we had buyer control, but look at this selling move. We're seeing a selling move here, which is even stronger than the buying move that we saw that kicked off this push to the upside. So that makes this, even though the break was good, the pullback's telling us this is not a high probability opportunity, and it's telling us this is a trade we should probably steer clear of. So you could remove that order, and as you see, the market pushes straight down into a new low. So just by reading the strength and size of the candles like this, we see that what was initially a good opportunity and what was initially a high probability trade based on momentum has dramatically shifted. And we're seeing clear control coming in from the sellers, which takes us down towards a low probability execution, allows us to remove our orders, and therefore comes through as a miss or a zero trade instead of a losing trade, okay? So that's how we can use momentum on pullbacks to avoid bad trades. So what does a good pullback look like? What do we want to see in order to have confidence to take a trade? Well, here we have a new uptrend in a market. We've seen some highs breaking. We've got a confirmed higher high here created by a closure, which happened around this level. And we would generally here be looking to buy once the market pulls back and fills this demand zone. Now, the kind of pullback we want to see, as we just discussed, is not going to be a fast one like this. If this kept pushing with this much pressure to the downside, I would generally not get into a trade like that because we will end up battling momentum, just like the example we just looked at. Instead, what we would prefer to see is if this market could steady out a bit and start moving in this slower, choppy fashion. Because, I mean, taking a look at where we've had this push of momentum from this demand, we got a very strong move here, okay? We've got 1, 2, 3, 4, 5 bullish candles, only one bearish candle in the mix, and even this one didn't really even push us down past the previous candle. So this is a high momentum up move. If we see a low momentum down move, that's about as high probability as we get for securing a good execution for a buy in this trade. Letting this one play out, you see, we start to see some buying pressure coming back into this market. Look at these moves to the upside. Let's consider the timing element as well. This is just a few hours of price action. This is a very long time. This is a couple of days pulling back down towards the entry. So if we're able to get this high in just a few hours, but it takes a few days to get back down this low. What's that telling us? It's telling us buyers are still strong. They're coming in, they're pushing back, they're resisting this downside essentially. And we see this continue all the way down into our entry, which would therefore be where we would be happy to get into a trade and where we'd want to see a then new drive to the upside. As you can see, as soon as we hit that demand, we start to see that strong bullish momentum kicking back in. This time, not quite as strong as last time, but we're getting consistent pushes of very bullish candles with very little pullbacks and very little resistance from the sellers. And that takes us all the way up into new highs in the trend. So that's an example of a good pullback. Essentially, the characteristic we want to see is fast push away, slow pullback down. Choppiness like this is also great to see because it tells us there is still resistance from buyers. Even as the sellers come in, buyers are having their go as well, okay? And that is really what we want to see in order to line up a high probability trade in line with momentum. And as you can see, there's the outcome. So we're looking for strong bursts, slow pullbacks. Breaks of structure. When we see a break of structure, which is a push over a previous high or low, we generally see that as indication to get into a trade. So if a market is downtrending, creating lower lows and lower highs, and then it breaks up into a higher high, we then generally want to buy it when the market pulls back because we expect this to open the doors to an uptrend, which should take us higher. But there are good and bad breaks of structure, and we can identify this by looking at the momentum. When we take a look at this chart here, we can see we have had a lower low, lower high, lower low, and then we've pushed and broken up into a higher high. So this would give a lot of traders indication that when the market pulls back to this range somewhere, they will be looking to buy this market to take it higher. However, this is what we would consider a bad break of structure, down to momentum. And if we avoided taking trades like this, we are going to avoid taking quite a lot of losses. So I want to draw your attention to this area here. Now, this initial push at this point is okay. We've had a reasonable push. The problem is the move from this low upwards is pretty weak as it is. We had a push to the upside, which looked good, but then we had an equally strong selling move, which wiped out that price action. Again, a push to the upside, but a reasonably strong selling move again. We're not seeing clear directional strength from the market. We're seeing a chop like this. Every time the market tries to go higher, sellers come in and push it back down. And yes, we do make net upside. Yes, we are eventually breaking into a new high, but this whole move here is very choppy, just like what we've discussed there. Now, the next problem, as soon as we make the closure, the market comes down and closes back under the high. And then we have this horrible, slow, choppy move away. There is no momentum in this market. Now, there isn't particularly loads of visible selling pressure here, right, in this range, but there also isn't particularly any visible buying pressure. We can see the size of these upper wicks. Every time the market pushes a little higher, we are met with wicks, which is showing selling pressure coming in and pushing the market back down, rejecting upside prices. So these wicks are the first indication here, really, that the market may not be as strong as we want it to be. When we see a break of structure, we want to see clear control, which generally is going to mean we want to see this market pretty much immediately create some strength or push with a bit more momentum than what we're seeing here. We don't want to see a very half-hearted break and then a complete flat out of all of the momentum, because what this is generally telling us is now the buyers have lost control. It's not saying the sellers have taken control yet, but it is telling us that any buying that took place through this mediocre buying move and this weakly formed higher high, it's gone, okay? The buyers got to this point, but they're not really getting any further. Now, if you were to look for a buy when the market pulled back, so you were looking anywhere in this lower range, you're going to be in for a bad time when you see momentum like this. Because when we see momentum die out instantly after breaking a high, we open doors to, of course, sellers stepping in. If we aren't seeing a continuation of the buyer control, if we're not seeing a clear break, a strong close, and then a nice steady pullback down, well, then we're in a position where we're seeing, well, what we've got here, which is basically a flat line of buyer control as soon as the high is taken, which pretty immediately opens doors to sellers reclaiming control because the buyers are not strong enough to take control and keep control of this market, which is why we then get large downward moves like this, and any buys that would have been taken inside of this range would now have resulted in a loss. So when you see a break of structure, don't treat them all equally. We want to make sure there is actually power behind the move. We're looking at the strength of the candles. I mean, in this fact, there is none. We're looking at the speed of the candles. How fast have the candles created upside versus the candles that we're creating downside. Well, in this instance, the downside moves we've got here, the downside move above that, is way stronger than the buying move we've got here, and it happened a lot faster. I mean, if we look at the timing from the low here up to the high, which would be about there, we can see that within the same time period, the selling control was actually a lot stronger. In fact, in the same time period, we got all the way down from here to the low. So this buying in this period of time is much weaker than the selling was in an equal period of time, which tells us sellers are likely to step back in again and take control of this market because they are realistically stronger than the buyers here. So that's a bad break of structure. So now let's take a look at a good example of a break of structure. So this market is in a downtrend. We are continually seeing lower lows and lower highs form until after we created this lower high, the market broke and created a higher high just up here, right? So that gives us first indication that the market structure has shifted. And generally then that's going to lead us to want to buy. I'm going to use demand zones to buy. That's what I use. When the market pulls back to that level, we would then be looking for an opportunity to buy this market and take it higher, right? That would be the general consensus. Now, what I want to draw your attention to in this example is the strength of this move. We can see that the break of structure that occurred happened with incredibly strong candles. From these three candles, we can see the first one, driving from demand, had little to no wicks either side and a very strong uninterrupted candle body. The next was the same. We had equal wicks either side, which again shows, yes, there are some wicks, but it shows there is no significant selling that's stronger than any significant buying, or vice versa, on the wicks. The candle body has closed exceptionally bullish, and the wicks being equal tells us that there isn't clear control over the wicks from one side. So there's no reasonable selling pressure that's going to scare us off. Now the third candle following on from that again is a massive candle body with a tiny wick at the top, no wick at the bottom, which again shows uninterrupted buying pressure. So this is an incredibly high momentum move. Now if we consider the time factor as well, within 1, 2, 3 hours of trading, we have taken out, days and days and days worth of previous price action up to this point. So we've seen a major reversal in the strength of this market from sellers in a downtrend all the way into one quick burst of buying, which has taken us back to, previous days highs, right? Back into, previous week highs. This is a very big move. So this is the kind of thing we really love to see when we are trading, because when we see this very strong momentum, we know we're on the right side if we join the buys, okay? So if we were to buy from that area of demand, we would be in for a very good position because we know we're on the side of the stronger party, which in this case is the buyers. So that is pretty much exactly what we want to see, okay? Again, it comes down to the strength, the size, and the speed of the candles. Size of the candles, we are looking for big candle bodies, little to no wicks. Also, another factor there is we have 0 pullback or indecision candles in this move. It is a very clear push of 1, 2, 3 direct hours of buying. And again, the speed of the candles, well, we've seen 3 hours take out a week worth of price action previous. So that is pretty much the picture perfect idea of a break of structure. And you can see how this is much better than the example we just looked at, which is what you may be trading right now. So here's an example of pretty much a picture perfect trade when it comes to momentum. Here we can see the market's created a high, a higher low, and a higher high. And here it's broken through this low, which opens the doors to downside. Now, what can we notice when we look at this downward move? Well, it is a very high momentum down move. We can see within the span of 2 hours here, 2 single individual hourly candles, we have taken out so much price action. We've taken out all of these previous candles back to the beginning of this movement, which took place 4 days earlier. So within 2 hours, we've wiped out 4 days worth of price action. This is an incredibly strong downward move, and it's pretty much exactly what we want to see to set up a good trade. So with that break in mind, we now know selling pressure is indeed in control. If we're looking to sell this market, we would use a supply zone, and this supply zone would be situated up here. We put our stop loss over the swing high. Targets wise, we're going to just push it to this wick. Okay, that's a nice simple target. Just looking at that swing low there, for example's sake. Now we have good odds of this going lower because we've seen, of course, this massive bearish down momentum move, which tells us sellers in this phase of trading have taken over control from the buyers. So we have good odds of seeing this leading into a reversal. And now let me show you the next best thing about this trade. See this momentum on the way back up that we're seeing here? This momentum is considerably weaker than the momentum on the drive down, okay? So we're factoring in those 2 points together. Very strong down momentum, breaking structure, slow, choppy upside movement, pulling back. What does this tell us in terms of momentum here? Well, this tells us the buyers are seeing resistance or resilience from the sellers. Every time the buyers try to push the market higher, there is a push back down from sellers. And the push down is actually reasonably strong as well. We see a small push up, we see a push down from sellers. We see a push up, a push down from sellers. Our high is printed just here underneath the swing high, still within the bounds of a valid trade. And then we start to see the market selling off. So we have the stars aligning essentially on this position. We have massively strong selling pressure and we have slow, choppy buying pressure with an indication that sellers are still stepping in. Now, as well as this, look at the wicks that we are seeing. If we look inside of this range, every time the market tried to push higher, it got pushed back down. And these wicks indicate rejections or areas where sellers have stepped in and taken away control and attempts from the buyers. We see the same thing again up here where the execution was made. We make no closures above the supply zone. We just have these two wicks which have driven the price back down. So this is pretty much a perfect trade based on momentum. We got our break, very, very strong. We got our pullback, very, very weak. What have we seen at this point? We've seen a sell to the downside, which has pushed us down to create a new low, but only with a wick at the moment. Because we have our overall bearish bias, we can see as well, this selling move here is a lot stronger than the buying move on the way up. It happened faster and there was less interruption from buyers. See how this is kind of a, wiggly fashion. Strange way to explain it, but we have this kind of push up, push back down, push up, right? Like a wave. This move down, we don't really have any of that. Yes, we have some small bullish candles, but it is overwhelmingly bearish and there isn't really any of that wavy structure to it. It's just a straight drive down, which again tells us sellers hold clear control. Now, if we were to follow the same format here, we've seen these large sell candles. We have a supply zone just here. There is no imbalanced supply zones above this, so this would be the prime point to sell from. And we could actually use this as a secondary opportunity to get into the trade with a stop loss over the swing high again. Or you could use it as a scale in for a trade, following, of course, the bearish momentum that we see in control. Now, if we see this pull back up towards this area of supply, you see this trade tapped in very nicely, and then the trade sinks so quickly down to the target. So again, what do we see here? Very strong down momentum through this move, slow, wavy upside, choppy price action, pulling back. What does this tell us? This tells us buyers are not strong. What do the wicks tell us? What do these bearish candles tell us? What do the pullbacks inside of this smaller internal move tell us? They tell us that sellers are still here. They're still kicking and they're still pushing strength into the market. So we're seeing weakness from buyers, strength from sellers. Supply is hit, we get that strong sell-off. Now, the dream scenario would have been just a pull to here and a sell-off. But again, the slow movement of the market gives us confidence this area can hold. And as you can see, it does. So that is how you would find perfect trades using the momentum. And bringing everything we've covered today together, you can see just how effective this momentum is. Now, what do we learn from this bullish candle here as well? And this bullish candle after we failed to really make a closure beneath the low? Well, this is how we would avoid taking a bad trade. So if we'd taken these two positions, we saw this very strong bearish move. We said, let's sell from supply when the market gets back to it. But then we see wicks, we see a buy candle, which is engulfing multiple previous bear candles. We have a tiny pushback from sellers, and then we have a big explosion from buyers driving us up towards this supply zone. Well, if we were holding sell orders here, we would happily get rid of those orders based on the fact that we can now see we're starting to see a shift. Through this move, we only had weak buying. Through this move, we only had weak buying. However, here, we are seeing strong buying. So therefore, selling at this point would not be a good idea. And as you can see, it followed through with a closure above the highs. So you can see there the effectiveness of strong momentum for your trades and slow, weak momentum against your trades for the pullbacks. We saw that twice here. And then we see where the strength comes in. We eliminate the opportunity to take another trade. And instead, we understand that, okay, the buyers are so strong here that this zone probably won't hold. So selling should be held off. So you can see the power of momentum there, and this is what I believe is the missing piece from your trading. So that's how you use momentum to take great trades and avoid bad ones. If you want some more free high-level education, check out the link at the top of the description. That's free. I'm sure you're going to enjoy it. If not, check out this video next and subscribe to my channel because I put out these videos all of the time. Thank you for watching. I'll see you in the next one.